Hi everyone, so in today's video I would like to touch a bit upon technical analysis. So unlike fundamental analysis, is a different form of analysis that involves investors taking a look at price changes, the price patterns, and to predict the future trend of prices rather than looking at the intrinsic value of the stock. So it's sort of trying to spot patterns in the trends of the prices, trying to spot in terms of short increases or decreases of the price level just to get a sense on when to enter and exit the market. So again, it's also a technique that investors use to buy and know when to buy or sell a stock, and it's also used for a short-term basis. Now, what is technical analysis? So technical analysis is the trading discipline used to evaluate investments and identify opportunities by analyzing statistical trends from market activity, price movement, and volume. So usually, in some technical analysis, investors would understand that trends and past patterns tend to repeat. So if the analysis focuses on price patterns, so it's usually for a short-term type of trading trend. Now, technical analysts look at price charts, so like candlestick charts, the famous candlestick as look we've seen here and seen here, and try to spot trends, uptrends, downtrends, to analyze the market trend and direction. So when technical analysts use sort of this trend spotting, there's many different trends. I can show you on the next slide. But the main general idea is that there will be support and resistance. So the support being a line where the price stops falling, and the resistance being the price where it stops rising. So you can see a general upward trend in this image here. However, technical analysis is really complicated. There are many different patterns, indicators, models that investors use, quant analysts use, etc. So the idea is that technical analysis may be a bit difficult, especially to justify during investment trades for long-term stock holding and value, but it really helps to determine when to enter or exit the market in the shorter run. Now, here's the important part, is knowing how to read a candlestick. Now you can see here a candlestick has many different patterns. You can see the different patterns that technical analysis will tend to read and understand, and then sort of deduce when to enter or exit the market. As mentioned earlier, these are the many different patterns. But let's first understand how we can read a candlestick. So the first thing you got to understand of a candlestick is one candlestick represents a time frame. It could be in seconds, in minutes, in days, or in a year, for example. So you can see here, this is the price axis and this is the time axis. So each candlestick represents one period of time. You can set the sensitivity of the time to, let's say, 1 minute, 1 hour, 1 day, etc. And you can get to see the different candles per that time frame. Now let's first understand the terms bullish and bearish. So bullish is usually representative of a rise in the price during that time period. So a green color usually is defined as the rise of the price of the stock or of the security in this time frame. So why is it given name the bullish? It acts as how a bull will attack from down to bottom using its horns. So usually a bullish candle shows that in this time frame, the opening price, let's say this is the day one. The day one opening price is here, and the day two closing price is here. The day one closing price is here, and the day one open price is here. So it opens today at, let's say, $5, and it closes today at $8. Now it's really simple. What do this wick shows? So it shows that during this time frame, this top here shows the highest price ever reached. So for example, if today started at $5 and it fell to $4, so this is the lowest price reached, fell to $4, then it rose to maybe $10, the highest point today. But eventually the market closed at $8. So it shows you can see this is the open price, this is the lowest price it reached, the low wick, the highest price it reached today, high, and the close price here. So similarly or differently, a bearish candle represents the same thing, the same time frame, but the price finishing lower than when it started. So this is the opening price, this is the closing price, this is the highest price reached in the time frame, maybe 1 day or 1 second, and this is the lowest price reached in the same time frame. Again, it mimics how a bear will attack from top down. So a bear gets on its hind legs and attacks from the top to down. So that's where it gets the name. So usually a bullish candle, again, is the rise in the price is denoted usually by green, and a bearish candle is denoted by red when the price falls. You can see here the opening price, the highest price it reached in this time frame, the lowest price reached here, and then the closing price, which is here. So you got to really understand how to read a candlestick. These are the basics. So to recap, starting price, if it's a bullish, i.e. the increase in the price, opening here, closing here, highest price ever reached in this time frame, lowest price ever reached in the time frame. Bearish candles, fall in the price, opening price, closing price, actual opening, actual closing price, lowest point it ever reached today, and the highest point it ever reached. So this is just a basic understanding on how to read candlesticks. If any of you are interested in learning about how to understand the patterns, what do the patterns usually signify, you guys can do a bit more research, especially understanding all these mentioned here. Thank you.